Good afternoon, everyone. Welcome to our webinar for August month. Obviously, we're looking back over what happened during July, and it was an interesting month. And I'd like to start off by just making a few political observations. The first one is that Cyril Ramaphosa appears to be consolidating his position within the ANC. And at the recent provincial elections, he won key positions for his supporters in the elections both in Gauteng and in Natal. And obviously that also means that Zuma lost those positions. So his position is slowly strengthening and consolidating, and as it does so, that gives him more scope for radical changes and improvements, hopefully. The next point I want to address is the question of the BRICS summit. BRICS stands for Brazil, Russia, India, China, and South Africa. So it's a group of emerging markets or emerging economies that get together periodically and look at ways to assist each other economically. But what's impressive about the BRICS summit is that Mr. Ramaphosa managed to go there and get $14.2 billion from China, a promise of $14.2 billion of investment from China. And that's to add to the 20 billion which he got from Saudi Arabia and the United Arab Emirates. So altogether so far he's brought in about $35 billion since he started on his quest to get $100 billion over 5 years. And seriously, this ability which he has to persuade international leaders and governments to invest in South Africa is an extremely valuable asset for this country. It's actually a game changer, and it's so far away from what Mr. Zuma could have done as to be a joke. And obviously that has an impact on the rand as well, which we'll talk about in a moment. Let's look at some other issues in the economy. First of all, since 1994, one of the key changes in the South African economy is that an awful lot of people have suddenly had access to credit, which they didn't have before. And a culture of sort of spend now and pay later has developed. And that has led to a very high impairment rate. Now, a credit active consumer is considered to be impaired when they are 3 months behind or more on at least one of their credit contracts. So at the moment, nearly 50% of our credit active consumers are impaired, and that is not a good thing. Clearly we need to address that. The National Credit Act does help a little bit, has helped quite a bit, but people need to learn to save. We need to develop a culture of saving. We've got a very, very low savings rate in this country, and that means that we are totally dependent on foreign direct investment. The sort of thing that Cyril Ramaphosa is doing is going out and getting foreign direct investment into this country. So that provides businesses with a source of capital which in a normal country would come from the savings of their citizens. But in our country we have such a low savings rate that we have to look outside the country for capital. Look, in an emerging market that is not unusual, but I think South Africa is exceptional in that regard. We have this spend now, pay later attitude, and most people are living to the full extent of their credit rating. In the month past, the South African Reserve Bank has seen fit to cut its growth forecast for GDP from 1.7% to 1.2%. And given that the first quarter saw minus 2.2%, and the second quarter was just a little above break even, we think the last 2 quarters of the year are going to have to be exceptional. And they probably will be pretty good. I don't know if they'll be good enough to get us up to 1.2%, but we'll see. Of course, one of the negatives has been the rapid rise in the petrol price, which impacts on inflation. A big part of that, of course, is the levy, which is partly the Road Accident Fund and partly the government's levy. In 2008, that levy used to be R1.30. It's now R5.30, and a good chunk of that goes to the government, who obviously are desperately short of funds right now. So They need that increase in the petrol price. The national debt is sitting at 53% of GDP. And of course, the government has got massive commitments to the state-owned enterprises, and particularly Eskom, of course. In fact, the Eskom debt, total debt, is around 367 billion rand, of which about 350 is government guaranteed. The new CEO, Mr. Hadebe, has tried to curtail the situation by suggesting that they give us 0% increase this year, but his efforts were thwarted by Pravin Gordhan, who stepped in, and now obviously Eskom is going to have to pay something of the order of 7.5 or 8% increases. And that all that really means is that they will have to do more retrenchments more quickly. They were only permitted a 5.2% increase by NERSA this year, and I think in the long term the only real solution for them will be to start selling off power stations. They've got about 50 power stations operating in South Africa. Most of them are coal-fired power stations, and most of them are quite old. But if Eskom offered them a contract to buy electricity from them, they could sell these power stations off individually as going concerns and then use that capital to bring down their debt. In other words, what I'm suggesting is that Eskom should get out of the power generation business and just stay in the power distribution business. They are already paying the independent power producers for their power, and they are completely independent. Why shouldn't the existing coal power stations also be sold off and operate independently? They would operate far more efficiently, and then Eskom would be in a position to buy power from whoever could produce it the cheapest, and obviously with a view to its pollution impact. Anyway, that's what I think will eventually happen here. And then let's look at the inflation position. Inflation, of course, is just a form of tax, because the government prints additional money and they get to spend that money, and the rand in your pocket goes down accordingly. It's not a new idea, it's an ancient idea. The Romans actually invented it. They had a gold currency in those days, gold coins, and periodically, especially when there was a new Caesar in power, they would call in all the gold coins and make a note of who gave them what coins. So this citizen gave them 100, that citizen gave them 50, and so on. Then they'd put all the coins into a big pot, melt them down, and add 20% of lead. Then they would remint the coins with the new Caesar's head on it, his image on it, and give everyone back their coins. But of course then they were left with 20% in the bottom of the pot, and they used that to fight the next Punic War. In those days they called that debasement. Today we call it inflation, but it is the same thing. So what I'm suggesting to you is that inflation is really a subtle and undisclosed form of taxation. And even in the West, they use the euphemism quantitative easing, but it is really just printing money. I mean, it's the same thing that Robert Mugabe did that eventually caused the complete collapse of the Zimbabwean currency. Now what's happening is interesting, because in Angola they're having exactly the same problem. Angola's inflation rate has reached 20%. And they say that inflation goes very slowly from 0 to 20. But from 20 to 100, it goes very quickly. And the reason for that, of course, is that businesses start to take it into account. They start to adjust their prices automatically every quarter. They'll push prices up all the time. People who are earning wages will they'll start with the inflation rate and then add the increase that they want on top of that. So everybody starts taking it into account, and it actually takes on a life of its own beyond 20%. And becomes sort of a self-fulfilling cycle. And it's very, very difficult to break that situation. Now, in the case of Angola, Shoprite Checkers has suffered quite badly from this, because they have 30 stores in Angola. And Angola was one of their really big profit centers, and now suddenly they're being hammered by inflation, and it's a really big problem. We just have to hope that the South African authorities continue to keep a very strong grip on our money supply in this country, the Reserve Bank, and to not allow quantitative easing or printing of money to just get them out of the situation they're in. Of course, it's very tempting for a government to just print the cash it needs. It doesn't have to pass unpopular taxes. It doesn't have to cut back on civil service or anything like that. They just print the money and use it. But then everybody's cash in their pocket goes down in value in purchasing power. All right, let's take a quick look at the rand. Just want to get that on the screen here for you. As I suggested earlier, the rand is benefiting at the moment from Cyril Ramaphosa's efforts. You may remember this chart. This is where Nene was fired over here and Pravin Gordhan took over. From the time he took over, the weakening trend, which I came to call the Zuma trend, came more or less to an end, and the rand started to strengthen steadily. And it strengthened between two channel lines, which you can see quite clearly identified here, the upper channel line and lower channel line. And of course, what's interesting about this is that those two channel lines are pretty much parallel. And after Ramaphosa was elected over here, this is where the ANC's elective conference took place, the rand strengthened very sharply down to 11 Rand 50, nearly touched this lower channel line and then weakened from that point. The most of this weakness was caused by a shift in international sentiment. International investment sentiment is either risk on or risk off. If it's risk off, it means that they withdraw money from emerging markets like South Africa and put it into safe assets, what they perceive as safe assets, which mainly means the United States Treasury bill, the 10-year T-bill. And obviously when they're risk on, they take the money out of the Treasury bill because it's got such a low return, only 3%, and they go and look for a much higher return in emerging markets like South Africa, where they can earn 8.5% or 9%. So in fact, you can quantify the risk exactly in the South African economy by looking at the difference between our long bond, which is the R168, and the yield on the US T-bill, which is just around 3%. So the T-bill is 3%, the R168 is about 8.5% to 9%. So the political risk in this country is worth about 6% per annum to investors. It's quite interesting to do that. And of course, that gap changes quite a lot. And what is interesting also is that South Africa's currency is much better than the currencies of other emerging markets, but I'll get to that. So now the rand, after having come all the way back and touched this upper channel line at about 1375 to 1390, now is back in a strengthening trend. And this new strengthening trend, which is right at the end here, is caused by Mr. Ramaphosa's efforts out there at bringing in foreign direct investment, or FDI as it's called. He's already brought in $35 billion, US dollars, and you can obviously multiply that by, 13 in order to get back to rand. So it's a significant amount of money, and that is causing the rand to strengthen. And if he continues doing this, the rand will strengthen all the way back to this lower channel line here. And that takes it down to about 11 Rand, 10 Rand 90 to 11 Rand to the US dollar. So we'll wait and see what happens. But it's very interesting that Ramaphosa has shown this ability. It's no surprise really, because he is in his own right a very successful businessman who's used to negotiating at the highest level, both in this country and outside of it. All right, so other emerging markets have had to raise interest rates in order to counter the risk on their currencies, and that obviously is depressing for their economies. We haven't had to do that yet, and I don't think we will have to. All right, so let's look at the US economy. So now I'm going to go to the S&P 500, which you know is my preferred measure of the US economy. It's the 500 largest companies on Wall Street. I'm just going to put a bit more data on the screen here so that you can see it more clearly. All right, here you can see that we reached a record high there at 28.72. There's the 10% correction, taking us down to this support level at 25.81, which was then confirmed again over here. And you'll see at the same time resistance emerged at 27.86. And then a channel appeared. Within this correction, a channel began. And you've got an upper and a lower channel line, just as you are used to, and of course the two channel lines are parallel. Now the upper channel line has now got 4 touch points. You can see them there. And the lower channel line has 3 touch points. So these two channel lines are pretty secure. They're pretty solid channel lines, pretty reliable. And you can see we went up recently and touched this upper channel line almost exactly. I mean, it's as if somebody had put a ruler there and said the S&P cannot go above this level. And then it weakened back from that point. And so we're seeing it fall back now. The question is whether it will break this resistance, or whether the resistance will now become support. And that often happens. Often when you've got an upside breakout through a resistance line like this, it then subsequently becomes a support point when the market comes back again. So we'll see whether that happens or not. But whether it happens or not, what is clear is that the US economy is flourishing, and the S&P 500 is very close to breaking this all-time record high at 2872. In fact, we believe that that will happen within the next month or so. So there you go. And of course, the US economy, what happens there tends to happen in the rest of the world. You will notice that our JSE overall index is tracking up again now, and I think that's in anticipation of better world economy and better figures coming out from the US economy. The US economy in May month had a very strong manufacturing growth, which showed that the economy is still booming strongly. And of course the S&P follows the economy. And obviously if we break through this high point here at 2872, it means that the long-term bull trend, which you see here now on the screen, and which started in March 2009, is still in process. And indeed, if we go back and take a look at the more recent figures, you can see that the 300-day moving average, simple moving average, is still rising very steadily, which shows that there's no bear trend here. Despite the correction, this trend has continued to go up. So we reckon that the bull trend in America is not near to finishing. In fact, it's just getting going. That's our opinion. If you want the background on that, I suggest you go to the website, and under articles you'll find a thing called Our Background Approach. You need to read through that, and that will give you the background, the theoretical background as to why we think this bull market in America will continue. All right, let's look a little bit at commodities. Of course, in the commodities area in South Africa, there's been a huge debate going on over the third charter, which is really a balancing act between populism on the one hand and sound investment strategy on the other. On the one hand, the ANC is very concerned about the imminent 2019 elections, which are not that far away, less than a year away, and they don't want to lose too much ground there. So that is one of the reasons why they've adopted a more populist approach. And the same thing applies, of course, to the wage settlements with the civil service and also at Eskom, where they have sought to pacify their electorate. That's the only reason I can think of for them doing what they have done. And then, of course, on the other hand, you've got sound investment principle. So if you want to attract overseas investment into the commodity markets, into the mining industry in this country, you've got to have a charter which is encouraging for them. And the current version of the charter, which is due to go solid in about September, October, or November of this year, is definitely not investor friendly. We can just rely on that. And if obviously the National Union of Mine Workers gets their demand for a 1/3 pay increase, then it will simply put the mining industry out of business. The Mineral Resources Council, which used to be called the Chamber of Mines, says that about 80% of our gold mines, for example, are either at break-even or below it. And that's obviously a very sobering thought, isn't it? The gold industry is basically dying. If they have to pay a 1/3 pay increase, and remember, the wages in a gold mine are roughly 50% of its costs, that will simply put them out of business. And yes, they'll all have very high wages, but then they won't have any jobs. So that's the concern there. Mantashe, is our Minister of Mineral Affairs, and he is very keen on this use it or lose it approach to mining rights. We have thousands of mining rights, exploration permits which have been granted, but very, very few that have been brought into production. So that's obviously a big concern. He wants to take those mining rights away from people who are not exploiting them and give them to other people. All right, that's sort of a roundup of general things that are going on in the economy and on the stock markets. Just like to look now at a few companies that are out there that might be of interest to you. The first one I want to talk about is a company called Silvertree. Now, Silvertree is a 2013 startup. So it started up recently, 5 years ago. And they are in the online buying business. In other words, they are people who look for opportunities to exploit consumer spending online. And so far they're doing a turnover of about $40 million, which is pretty good, an annual turnover. They want to push that up to $300 million by 2023 and then list on the Johannesburg Stock Exchange. So this shows you the direction that consumer spending is going. At the moment, online spending in South Africa is less than 1% of total consumer spending, but that will not stay like that. In the UK, it's about 28% of consumer spending, and it's huge. It's causing companies like Walmart to close down stores, and Tesco and people like that, actually closing stores because of the pressure of online buying. Of course, Silvertree is not alone in this industry, and it's facing stiff competition from Naspers, and you're probably familiar with Naspers's brands Take a Lot and Mr. D Food. And obviously this is a hugely disruptive technology, this online buying, because it means that all the people who are investing heavily into shopping centers, like Accelerate, for example, who are busy building the new Fourways Mall, may be in great difficulties in time to come. What if those shopping malls just simply cannot attract supermarkets and big retailers like Game and so on, because they choose to sell more online and less through face-to-face shop fronts? So anyway, it's just a little insight there. Watch out for Silvertree. They say they're going to come to the market in 2023. All right, now I'd like to look at Capitec. It's an interesting share. Obviously, it took a hammering from the Viceroy report. I'll just put a bit more data on the screen here. So here you can see the Viceroy report came out, knocked the share right down to 800 Rand a share. It was about 1100 up here, almost 1100 Rand. Knocked it down to 800 Rand a share. And it found strong support at 800. It then came up and found resistance at somewhere around 930 to 940. It's recently making an upside breakout over here, as you can see. This is mostly because the biggest criticism which Viceroy had about Capitec was their payday loan system, and they had they were Summit Financial Partners that, working off that, were saying that there would be a class action against Capitec for 12.7 billion Rand. Summit Financial Partners has now abandoned this position and has been forced to withdraw it. So now Capitec is starting to move up. But you know that whenever you get an extended sideways market like this between a support and a resistance line, you can do a horizontal count using point and figure. And we did exactly that, and the horizontal count indicates that Capitec should go up to about 1,300 Rand per share. So it's sitting now around 950, and it should go up to 1,300 according to the horizontal count. In my experience, horizontal counts are about 70% accurate, and if anything, they understate rather than overstate. Okay, let's look at Glencore. I hope I'm getting somewhere here. Let's just see. I think we've got it already. There's Glencore, right? So now I just want to put bit more data on the screen here. It's 5 years. We added it to our winning shares list over here in September 2016. And you can see that this is a company that has benefited from the turnaround in commodity prices, which basically started in January 2016. From January 2016, commodity prices, all types of commodity prices, precious metals and base metals and minerals, have been going up in value. And of course, Glencore is one of the biggest international miners and sellers of these commodities. So it's benefited. You can see how the share price went up very strongly. And then at the top here, we've got a double top formation. You can see it quite clearly there. Very clear double top with the second top lower than the highest top. And that has led to disappointment. The market has fallen back from that level. Obviously, they're facing certain legal battles in the Democratic Republic of Congo. And also now the US has initiated a corruption probe. So there could be some further downside, and maybe that is why the share is selling off. But I can just tell you that this company, Glencore, owns the world's richest cobalt mine in the DRC. And cobalt is the basis of modern battery technology, and modern batteries are going to be used in electric motor vehicles, which are steadily taking over the world. They say that by 2030, at least 30% of motor vehicles on the road will be electric, and obviously they will have to have a battery, and that battery will probably have cobalt in it. So Glencore may be a very good option at this level. Okay, let's take a quick look at Steinhoff, because obviously we always try and look at Steinhoff. It's such an interesting situation from a technical point of view. We have always said since the first Viceroy report came out that what you needed to do was to put on this 65-day exponentially smooth moving average and wait for a breakout. That breakout has occurred, and now Steinhoff is moving sort of sideways along that 65-day E, but they have managed to tie their creditors into a lockup agreement, which gives them a 3-year window when creditors won't take them to court and insist on being paid and so forth. In fact, I believe that most of those creditors will convert their loans into equity in due course. This has come at a steep cost. They've had to pay 10% on that capital. And of course, you mustn't forget that there are still a lot of lawsuits outstanding against Steinhoff for their financial records, which were unreliable and on which people placed reliance. Christo Wiese, who was the chairman of Steinhoff, is suing them for 59 billion rand, and there are other lawsuits that are due to come through. I suggest that if you do want to get involved in the share, then you should be considering it now. But for goodness sake, apply a very strict stop loss, because there could still be things coming out. But most of the negative stuff is out. That's my opinion. And the share is much more solid now than it was 6 months ago. And you can see there the benefit of waiting for a clear breakup through the 65-day exponentially smooth moving average. It gives time for everything to come out of the woodwork. All right, now I'd like to look at Kumba. Kumba, of course, is an iron ore company that belongs to Anglo American, and they have an interesting situation technically. Just want to put a couple of years data, just show you something here. What you can see here is that, again, starting from, just put a bit more data on the screen. There you are, starting from January of 2016, when the commodities prices started to turn, the iron ore price was one of the prices that started to go up, and you can see that Kumba benefited enormously from that. And that ended up with a very strong upward trend here. That upward trend was brought to a halt because of news coming out of Kumba that Transnet had a number of derailments, and it had hammered their production, or their transporting of their iron ore to the coast on their Northern Cape line. And then, of course, that news was discounted, and then they began working with Transnet to sort out these derailments, and that caused a new upward trend, much more gentle though. Finally, they came out with results over here. Just move that up so you can read it, warning that the headline earnings per share would fall 37%. Those results came out there where you see that red arrow, and you can see there's a big red candle associated with that. In our opinion, this information is pretty much discounted into the shares price, and Kumba probably represents good value at the moment. Then let's look at Dis-Chem. As you know, Dis-Chem, one of our favorite shares, and just draw your attention to the fact that Dis-Chem, I just want to put 2 years data on here, has formed an island. You see where I've put this bar here, and it's actually moving up very strongly off that island. We still believe that the Dis-Chem story is a very attractive story as a long-term investment. They now are projecting that they will have about 150 stores by the end of this year. And remember, when they listed, they had 108, so they are expanding their store base rapidly. They compete directly with Clicks. Clicks has 600 stores, so that gives you some idea of the upside potential for Dis-Chem. And Clicks themselves are saying that they want to increase their store base to 900, and everywhere there's a Clicks there can be a Dis-Chem. So this is a company which has got a lot of upside potential, what we call blue sky potential, and we think it's relatively cheap now, below 30 Rand a share. Okay, let's look at Sibanye. This is also an exciting share. Never a dull moment with Sibanye. Neil Froneman's company, which is basically selling precious metals, platinum, palladium and gold. It's got big gold and platinum interests in South Africa, and of course it recently bought the silver, what's it, I've forgotten the name now, silver something mine in America. Silver Tree, is it? No, it's not. That's the company we looked at earlier. Anyway, the Stillwater mine in America, which is a palladium mine. They paid $2.2 billion for it, which put a huge strain on their balance sheet. They've now managed to do what's called a streaming deal to bring in $500 million. Basically what this means is they've sold their palladium, a big chunk of their palladium and some of their gold forward. And they've received $500 million now for palladium and gold that they haven't yet mined and that they must deliver in the future. This cuts about 1/3 off their gearing, which is very nice, and that is why you'll see the share price is starting to tick up. But again, our advice to you is put on this trusty old 65-day exponentially smooth moving average and wait for a clear upside breakup through that. So that's what we suggest. I mean, this is basically a speculation on precious metals prices. If you think they're going to go up, then this is where you need to be, and certainly you're not playing top dollar for Sibanye if you buy it at these levels. All right, then Anglo-American Platinum, AmPlats as they call it. This is the best of the South African platinum mines, and the reason it's the best is because it's taken on a very strong cost-cutting approach over the last 5 years. They've cut about 2/3 of their workforce, and they're now sitting in a very strong position in relation to other platinum mines. They've cut the number of mines that they've got from 18 to 7. They've wiped out their debt. They had 6 billion rands worth of debt, and that's completely been wiped out. And now they've even been able to pay a dividend of 374 cents. One of their secrets is this Mogalakwena mine, and that mine is the lowest cost mine in South Africa for platinum. And the reason is it's an open cast mine. In other words, there's no underground operation here. It's done open cast with big machines. And the cost of production is very low, and they don't have the huge workforce that the underground mines tend to have, and they don't have the safety problems and all sorts of other problems that underground mines have. Anyway, if you're going to buy a platinum share, this could well be the one that you want to look at. I want to look at Curro now quickly. Curro, as you know, is a spin-off from PSG, and they focus on the education business. Just put a bit more data on the screen here. That's a little bit too much. Let's go to 1 year. Right, and what I want to draw your attention to is that Curro, actually no, maybe we do need the 2 years, because I just want to show you, or even 5 years. I just want to show you this peak here, where Curro reached a price-earnings ratio of 245, which I think is the highest PE ratio I've ever seen on the JSE. Even Naspers has never been up at 245. And that occurred on the 30th of December 2015. Obviously, there was a little bit of window dressing, it being the last day of the financial year, but still, it was an impressive figure. And now, of course, it was also as unsustainable as it was impressive. Nobody can maintain a PE of 245. The reason it reached that level is because it's got such blue sky potential. I mean, this is a company which is basically supplying the education which the government schools seem no longer capable of doing. So they are stepping into a vacuum which has been left by government education, where standards have dropped and people don't want their children to go to those schools. And they have been opening and building schools at such a pace that, and there didn't seem to be any upside limit to how far they could go, and that's why they achieved this incredible PE. But that was unsustainable. Even now, I'm just going to go now to the one-year chart, and you can see even now they're on a PE of about 63, which is still very high, 63 PE. I mean, to put that into perspective, the JSE has an average PE of 19.3. Standard Bank, for example, has a PE of 12.4, and nobody would say that Standard Bank wasn't a good company. And Naspers at the moment has a PE of 61.7 with its fantastic investment of 31% of Tencent in China, and the fact that it's a massive rand head share and it's got about 150 billion rand in the bank in cash. All those things look good. Anyway, I just wanted to draw your attention on Curro to this head and shoulders, inverse head and shoulders formation that is developed here. Here you can see the left shoulder there, the head here, which occurred in June, and now a right shoulder. And now it'll be interesting to see if it can break up through the neckline. There you see the neckline. If it can break above that level, which would be at about 33 Rand, then it implies that there's strong upside potential for the share. Anyway, I'm just making a technical or charting point there. So it's just something for you to look at. And finally, I'd just like to just show you the Sasol chart, because Sasol has been very interesting recently. You may recall that Sasol took a big hammering in the second half of 2014 because there was a sell-off in the oil price. Here you can see this is 2014. There's a massive double top that occurred in Sasol share price, and then it plummeted down as the oil price fell from $150 odd per barrel down to $28 per barrel. So Sasol collapsed from about 650 Rand all the way down to 360. You can see that there was support at the 360 level, and that for the past 3 to 4 years, Sasol has been oscillating between support at 360 and resistance at about 492 actually. And it's been oscillating up and down. You could buy it anywhere around 360, sell it at 492, and you'd be making money all the way. But recently, now, it has broken up through that level. And here you can see there's the resistance line. It's actually not quite correct. This resistance line should actually be about there, right? So now that's the resistance, and you can see it broke up through that very convincingly over here and went up to a new high and then came back, and the resistance line became a support line. Now it's moving up strongly off that support, and today I believe it reached 520, so it went above this level here today, during the day. I don't know if it closed above that level. What I'm trying to say is that Sasol is looking very good. We again did, because we had a long sideways market here, we were able to do a horizontal count in point and figure, and we established that Sasol should go up to about 1,000 Rand a share. So quite a long way from where it is now. And that is the interesting thing about that company. But we have been talking about this for a long time. I think our first article on this was written in 2016, showing this support and resistance. But we're now getting a clear upside break out of that situation. Well, folks, that's all I've got for you today. I hope you didn't find it too tedious. And I should be talking to you again early in September. I wish you all the best with your investments until then. Thank you for listening.